If you are always in fear of failing, how will you ever take any risks? Because you'll always be timid. You always be afraid. You always be stuck, and you won't be able to move on up. Take a chance, right? Like we only learn from making mistakes. Hi, welcome back to episode number 7 to the Facts of Life podcast, where on every single episode, the acronym LIFE stands for something different. Hosted by me, John Doan. So today in Life for L, we'll be talking about lifestyle. How do you balance work and life? That's the key question. I think a lot of that has changed since COVID happened and people were able to work remote or work from home. That's actually changed a lot because it's been able to give a lot of people flexibility to work from home or work from the office. However, depending on the business that you're in, I mean, working from home permanently, it's not productive. In our business, in mortgage lending and real estate sales or whatnot, you have to be around, other employees. You have to be just around your whole team to collaborate, but to pick up new information leakage. Other people say things that you've never heard of. You pick it up and you start talking about it. And guess what? Now we're all kind of talking about the same thing. So information leakage is a really, really big deal, but you only get that if you're working in the office. So what is good work and life balance? To me, I think it's about balancing the two, like blending work and life into one lifestyle. It used to be where you would go to work 8 to 5 and all you do is work from there. And then once you get out, all you're doing is life stuff and then not working weekends. Yeah, it doesn't have to be like that. And it really has to do with what your career is in sales, mortgage lending, in real estate. You've got to be able to blend it. So I'm going to be very particular to what we do. However, a lot of people out there that are in sales or also have the same type of work where you're able to work from your phone and computer and mixed, with your lifestyle, that's the way to go. For example, as you know, I have 4 kids. When we go out and we have sporting events, it's a Saturday. Before it'd be like, nope, don't take phone calls, don't do any work, just focus on that. It's a little different. I can now, step away during a break for a volleyball tournament, let's say, when my son Jake's playing, and I'm able to make a 10-minute phone call or 15 minutes. And we have all the technology to record our conversations or take notes for us from AI. And that helps because you can just have a quick conversation, knock out what you need to, get some facts down, and boom, come back when you are ready to work again and, start that process. Same for Monday through Friday. If you're working and you got to run out and take care of an errand, or you've got to do some family stuff or, things that are just life related, you can. As long as you break it up and you're blending the two together and you've got a very healthy mental state, that's the way to go. Working from home a little bit, that's good. Working from the office is also good as far as blending the two together. I also think that when things get overwhelming or stressed out, you've got to take care of yourself too. I'm not talking about mental wellness, meaning talking to a therapist or a psychologist. I mean, you can if that helps you. I'm just talking about doing things that are relaxing that will help you be more productive. Whether that's working at the gym or going to the sauna and just relaxing and getting your toxins out, right? Or getting a massage once a week or every other week if your wages allow you to do so. That's what you should do. However, you should take these breaks so that you can actually relax as well. It's not all about work, work, work. And it's not all about just, life, life, life. It would be great to just live without having to work. However, to live, you need money and you've got to be able to put in that work in order to do so. A couple other things that I think are important is, just the priority, right? Um, gotta set some boundaries for yourself. If you're at the dinner table and you're having, dinner with the family, maybe that's not the right time to take a phone call, no matter how important it is. So saying no or, hey, let's not do this, or hey, I'll do this later, 10, 15, 30 minutes. It's just not going to hurt unless it's a true emergency, life or death. Yeah, I get it. However, if it's work, like you're, again, having dinner with your family and you've got messages coming in where your attention is needed and it's not an emergency, you can put it off. You can wait. You can hold. Next, let's talk about the I in life. Today, we're going to be talking about income. As a mortgage lender, real estate broker, sells homes, and does loans, I get this question a lot, but, what does it take to get qualified to buy a home? What do I need? One of the things that is most important is your debt to income ratio. DTI is what we call it in our industry. It's debt to income. That means you take all of your debt and you divide it by the amount of income that you make to really look at a standard affordability ratio. So it's not the total amount of debt that you owe. Instead, it's monthly payments versus your monthly gross income. So let's do an example. If you have a car loan and you have credit card debt, and you have student loans, and you add up the monthly payment for all those, liabilities that you owe on a monthly basis, and let's say that it comes out to be, I don't know, $2,000 a month, and your income today is $10,000 a month. Well, if you divide, the 2,000 by the 10,000, you're at a 20% debt to income ratio, just as is. But how does that pertain to you when you're trying to buy a home or when you're trying to finance a property? Well, now you're going to add in that $2,000 plus your new mortgage payment. If you're at $2,000 a month and your new mortgage payment is going to be $3,000 a month, well, that's $5,000 total divided by your $10,000 of income that you make. That puts you at 50% debt to income ratio. 50% debt to income ratio is about the highest that you can typically go when financing a property. Why is that? Well, we're going off of gross numbers here, right? And we're going off of minimum monthly payments based off of your liabilities. So, I mean, if you're making 10,000 a month, depending on what state you live in, let's say it's California, where we are today. Well, in California, not only are you paying federal taxes, but then you've got state taxes. So most people are paying 40 to 50% in taxes. So even though we're looking at this debt to income ratio of 50% as a maximum, that's tight. So if you make $10,000, you're in a higher tax bracket. That means you're probably paying, I don't know, 40% in taxes. And so you're taking home 6,000, right? And in our scenario, if we said $3,000 mortgage, $2,000 in debt, that's $5,000 in just minimum payments. That doesn't include you paying extra to get your debts paid off, quicker. You're spending $5,000 of your $6,000. So realistically, debt to income ratios help as far as getting your loans qualified. However, you really got to think about, can I afford, buying a home or not? Now, there are other tax benefits that a lot of people don't think about. When you rent, you don't get any tax benefits at all. If you were to pay $3,000 a month for rent, that's gone. Landlord keeps it. You don't get any of that benefit at all. However, if you were to buy a home and, you have a new mortgage payment, you get to, based on IRS tax code, you get to write off mortgage interest, your property taxes, some expenses. And so if you're making about $120,000 a year, the benefit that you would get that you would never have been able to get before would be the end of the year tax benefits. That may mean an additional $5,000 to $6,000 in additional income tax refunds at the end of the year. So you do have to count that number, right? Without buying a home and without getting that benefit, you don't get that tax refund, which you should apply back into whatever it is that you're calculating for when looking to buy a home. Again, if you are looking at buying and the new monthly payment's $3,500, but your affordability is more like $3,000. Well, if you're getting a additional $5,000, $6,000 at the end of the year in tax refunds, that kind of puts you back at a net number of $3,000 anyways. So consider that as a part of your debt to income ratio. However, if you were planning to buy a home and you want to be super prepared, super ready, that's why people always say that paying off your debts is a really good idea, right? Paying down debt, paying down liabilities, be ready for ownership. Make sure that, you're going to have enough money so that you can make your monthly payments and still be comfortable. You don't want to be, house rich, cash poor. Okay. Next, we're going to be talking about the F in life. Today, I want to talk about failure. I get this question quite a bit, probably because I'm a risk taker. I like to take risks. And the saying goes that if you take a risk, you will get, some reward out of it, but it's got to be well thought out. It's got to be calculated risk versus reward. When I was younger, I would take a lot of risk and not really think about the consequences. But I guess it's a part of maturing or as a business owner, really just growing and being experienced in how or when to take the risk and if the reward is worth the risk. So, I think that a lot has to do with the fear of failure. If you are always in fear of failing, how will you ever take any risks? Because you'll always be timid. You'll always be afraid. You'll always be stuck and you won't be able to move on up. Take a chance, right? Like we only learn from making mistakes and we grow and we evolve. However, if you are the type of person that takes risks, fails, and never ever learns from that or grows or evolves, that's a problem. That means that maybe you should be, fearing failure because you keep doing the same thing over and over and over and expecting different results. What is that? The true definition of insanity, doing the same thing over and over again and expecting different results. Yeah, let's not do that. Let's be calculated. Let's plan. Let's think about pros and cons. There are, a lot of people with mental challenges or illness, and failure is real. I don't want to take that. I mean, that could be used from a bad or traumatic experience. And I'm not talking about that. We're talking about fear of failure pertaining to taking risks, not from post traumatic experiences or traumatic experience that you've lived through. I'm talking about making decisions so that and maybe they're micro decisions and these micro decisions build up to be bigger decisions, right? It's really based on decisions in work instances. So again, just to be clear, don't want to discount people that are truly affected by fear of failure because of past experiences. So I'm talking about like, hey, should I, interview at this new job because I could make more money, but you fear that because you don't think that you're good enough. Or, hey, should I, I've been doing the same job for 10, 15 years. I'm in pro status now. I'm an expert at this, but I feel like I'm at, a cap or a ceiling of where I'm at. Should I go and explore opening my own business? Yeah, I mean, these are the things that I'm talking about. And unless you really jump in and test the market and build your own confidence up, how will you ever know? Sometimes people will ask me for my advice, like, hey, what should I do? I've been doing ABC for the last 15 years. I'm expert, I'm pro, but people don't appreciate me, or I'm working for employers and, I'm not getting that experience that I want. So I'll say, hey, double down, work harder. Why don't you, if your employment agreement allows for this, or if you're not hurting anybody, right? And you want to really, be safe and make calculated decisions on this, how about you start consulting or doing stuff on the side as your side hustle and start building that up until you feel a little bit more confident, right? You don't have to, jump all in or all out, right away or immediately. You could do both. Do a hybrid. Test and see how you do for yourself, how you do on your own. If things work out and you feel more and more confident, then you can drop off on one and continue the other. That's just one method that a lot of people will go through to aid with the fear of failure. However, the bottom line is fear of failure may be a mindset. If you're going to keep on putting things off because you're afraid to fail, doing that alone, my people, is just you're failing already by not making a move, by not taking a chance, by not taking that risk. You are already in the midst of failing. So until you test, until you try, until you put together a plan and put yourself to the test to see if you're really good for it or not, don't fear failure, you know, because if you don't do anything at all, you're already failing. So put it together a plan, make a move, give it a test, see what you're all about. All right. And the last part of our show today is the E in life. And we're going to talk about entrepreneurship. And I think that goes very well with what we just segmented into, which is the fear of failure. So I just talked to you about, fearing failure. And that kind of leads me to the next part with the same exact thing. When should I start my own business? I think that today, with the new generation, with the internet, with everything that's been going on, it's so much easier to start a business now than it was many, many years ago. Many years ago, it was like a lot of brick and mortar. You'd have to open up a shop or an office or a retail store, something brick and mortar physical that you would have to do most of the times. I mean, that was the majority. Then the internet comes out and there's so much more opportunities, right? I mean, we're talking about online sales, online marketing, online retail, all the way to being an influencer and getting paid for, having a ton of followers and being able to have companies sponsor you because they're tapping off of your big following so that when you present something or you talk about their products, you know, their product at hand is getting shared around, you know? And so there's a lot of different things that you could do. I think sometimes it's gotten a little too crazy where people have like 5 to 7 different side hustles. I always go back and say the same thing. It's like, jack of all trades. People always say that part. They don't say the second part, which is jack of all trades, master of none. You definitely want to be, an expert in one or two of the things that you do. And if you are a jack of all trades, the other things that you do should all be kind of related to your main expertise or profession that you are doing. And that works a lot better than just kind of like throwing things out. Now, I also see a lot of people trying to, start businesses up from nothing. Meaning you see people who try to start up businesses with no money. And I like the hustle. I love how people are going about it and they're trying to get volunteers to come on to help. The thing that I see a lot of where I'm not impressed with is the fact that, a lot of people try to do this, use other people's times and expertise, and yet they're not all in. Like if you're gonna open a business, I really feel like you've got to be all in. If you're still working 9 to 5, right? And I'm not talking about you starting up to get a feel of how you could do on your own. But if you're committed to making money and starting up a true business that will have employees or have expenses, insurance, costs, things like that, you need to be all in. If you are not all in and you always are like just halfway in, let's say, maybe your toes are just dipped in the water and you're just like feeling things out. Well, I don't really think that that's starting a new business per se, right? You're just testing the waters. But if you're going to start a new business, you need to be 100% of the way in. And then, a lot of people are always like, hey, should I look for investors? Should I look for people who can, put in money? Well, how are you going to get investors to believe in you if you're not even all the way in, right? And you've got to start it. If you're starting a business, you've got to be the professional. You've got to know what you're doing. You got to know what the ups and downs are, pros and cons, what the hardships are. Everything that's good and bad about the business, you should have a pretty good idea of before asking for investment funds or whatnot. It's got to be bare bottom, you using your hands and your brain to get your business started up before asking for any help from investors because you've got to have proof or evidence that what you're doing works. And until that happens, and I guess that just depends. I mean, a lot of tech stuff is not that way. A lot of people are starting up tech businesses, and a lot of tech is based on an idea. But even with that said, you've got to have a concept. And if it's tech, let's say it's software, you got to have the software program built. It's got to be functional. It's got to be working. It can't just be the idea, right? You got to have it like it's ready to go to market before going to ask for investors. But with that said, again, even if you're software, are you all in? Are you all in? If you're not all in, how are other people going to put it into your business? So when should you start your own business? People ask me when you're fully ready to, not when you're like thinking about it and just you're dipping your toes to see what it's like. I would say that you need to be financially prepared. Starting a business is not easy. There's ups and downs. It's a learning process. And I do believe that when you're younger, you should start a business because you have a lot more flexibility. Once you got like kids and you're married and you have bills, it makes it so much more difficult to start a business because it's a roller coaster ride sometimes going up and down. And it'll hit you financially. But if you're single and you're young and you have a business idea and you know that it makes money and you've experienced it and you're in the industry now, now's the time to do it. Don't wait until later. If you keep, I'm not saying that you can't do it later, but you want to stack your chips, have money in the bank, prepare for the ups and downs, keep it real frugal. Don't spend a ton of money so that when your business needs you and needs your funds to back you up, you have the ability to do so. So once you start your own business, I think I just explained how. I hope you're ready. Hit me up if you have any questions. If you liked what you heard here, remember to subscribe or like or make a comment. And yeah, thank you for watching today, listening in on today's podcast, The Facts of Life, hosted by me, John Doan. We'll see you next time. Thank you.